Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets trade with moderate gains on the November series expiry. The Nifty remains above the 12,100 mark, while the banking stocks are outperforming in trade. Reliance Industries becomes the first Indian company to touch the 10 lakh crore market cap mark. The stock trade with gains in trade today. Zee Entertainment remains the top loser on the index after 3 directors quit on Tuesday, citing multiple issues. And it's the second straight day of gains for the PSU banking index. The index is the top sectoral gainer, while all its constituents are trading with gains. Good afternoon, Neeraj. Clear outperformance continues, I guess, from the banking lot.
Yeah, and it's the same set of banks which are doing well. I mean, people have been arguing about how some of the underperformers like Axis, etc. should do. But we're not seeing that set do well. It's the same set of names which are taking the Nifty bank higher day in, day out. Almost every single day for the last few. Get the heat map up on the screen, and large constituents of the bank Nifty gainers would be out here visible. First, the possibilities of a price hike has gotten Bharti Infra really excited. That stock is up 10% in the session today. Some gains for UPL in the session today. Good going here. ICICI Bank adds another 2%. What I was saying, that it's the same set of banking names which are propelling the bank Nifty higher. In today's session too, ICICI Bank is up and about. And the commodity names continue to rise and shine. So JSW Steel up 3.5%, Coal India 2%, Tata Steel about 2% as well. Coal India part of the metal index, by the way. So keep that at the back of your mind. And SBI and ICICI Bank from amongst the banking space. But slightly more red than green on the screen compared to the morning. Zee, we're wondering why it didn't fall in the morning. Now, some bit of move as per what was believed to be the expected move, up 4.5% lower. HDFC and Bajaj Finance and HDFC Bank as well correcting a bit in the session today. I must say Bharti Airtel has cooled off quite rapidly today, down about 1/3% after being up for a better part of the trading day today. So Bharti Infra Divina on the upside, and Zee on expected lines correcting.
Yep, the PSU banks, that's the active pocket
at the broader end
session. Yes, even in the broader space, Corporation Bank, Oriental Bank of Commerce, all of these names are extremely active right now. For the index itself, while the Nifty 50 is absolutely flat, mid caps and small caps are doing slightly better. So the mid cap index itself is up more than 0.5% right now. Oriental Bank of Commerce right at the top there, 6.5% higher. Union Bank is up, and then you have the Indiabulls Group stocks, which are really active. So you have Indiabulls Ventures, Indiabulls Housing Finance will also come up on your screen, IDBI, RBL Bank. So it's the entire financial space that's hogging the limelight on the mid-cap space. Amongst the losers, you've got the likes of a Future Consumer, which is down 4.5%. Graphite India and Castrol India are looking weak, and Escorts too giving up about 1.33%. And moving on to the small cap space, let's quickly look at that. Dish TV, after seeing some really heavy selling pressure off late, has seen some buying coming in today, quite contrary to what Zee has been doing. IDFC is up about 4.5%. Syndicate Bank is up. Equitas is up. TV18 Broadcast and I think Network 18. These two stocks are also extremely active. Remember, you've got the Bloomberg exclusive of Times Group doing their due diligence to pick up some stake, and then you've got Credit Access Grameen 2.5% higher. Losing out is IRB Infra. We've got Lux Industries, Metropolis, which is somewhat not in focus anymore, but the stock is down about 1.8%. Avanti Feeds too loses about 1.7%. Now, let's talk about Indiabulls Housing Finance. I just want to quickly look at that one. Tomorrow is going to be an interesting day. You got the probe verdict by the MCA with regards to the functioning of the 3 entities and how that shapes up. The stock saw a huge surge. I think 309, 310 is what it hit. From there, it started to peak out, and right now at 299. The stock has anyways been doing well over the last few days, but expiry, and that takes all the attention in the last half an hour of trade today. Nirmeet is joining us to give us a sense of the setup for today.
Thanks for that, Divina. One positive takeaway, I think right from the word go in the morning, has been volatility index has been trading in the red. So that's a big comforting sign for the bulls. In fact, it's trading at levels of 14. It did slip below that mark as well, but right now down about 4%. Pull up the Nifty as well as the Bank Nifty futures. The rollover will come up on your screen. They're not picked up till now because yesterday's closing rollover were also in that range of 62 to 63%. Let's see in the last 1 to 1.5 hour of trade, probably you will see that picking up. But as you can see, there is build-up coming up for both November as well as December futures. And similar is the case for Bank Nifty. Yesterday's closing rollovers were at 50. Right now, it is at 57 to 58%. Important to highlight then, what are the levels you can watch out towards the end of the session today? And as we highlighted in the morning, the range was 12,050 to about 12,150 on this expiry day. And looking at the data, as you can see, the 12,100 put has been witnessing aggressive writing. Almost 23 lakh shares have been added, and the premium currently is at 10. So traders who will be writing this particular strike, even at current levels, they'll be safe till the time index trades around that mark of 12,085 to 90. While on the call side, you are seeing writing coming up for 12,150. So even looking at the premium of both these strikes, the range that you're getting at 12,085 to about 12,150 on the upside till the end of the session right now. In terms of individual stock futures, well, there are some strong gains coming up for India Bulls Housing, which has crossed its 50-day moving average. It's the top F&O gainer, by the way, though on year-to-date basis, it remains an underperformer, down 63%. The other stock, the steel stocks, continue to do well. In fact, that's another theme besides the PSU banking lot, which is working out. So JSW Steel has crossed its 200-day moving average, and there are clear signs of long build-up coming here on the futures side. As you can see on your screen, the rollovers are looking pretty good, 87%. Bharti Infratel, the stock has touched 100-day moving average, and the sort of gains that you've seen of 10% today, it's almost flat now on year-to-date basis, though for November series, the stock's up 30%. The rollovers too for this one are looking good right now. It's at 80%.
Okay, just before we move any further, mind you, the two stocks that you need to talk about today in big detail, and one of them has to be Reliance Industries. I know that broader on the spectrum, you'll probably look at India Bulls Housing Finance or a Bharti Infratel, but Reliance Industries certainly deserves that mention because of the headline change in the market cap. I think we'll get that math going. It'll be nice, slightly sub the 10 lakh crore market cap, but the big keeps on getting bigger. And I think from the time it's moved on from being a pure play oil and gas major to now what is largely believed to be a telco player coupled with the other businesses, it's not looked back. The last 1 year has been quite fascinating for Reliance Industries, and it's really staggering to see the kind of wealth generation that it has made in the last 12 odd months, at least, if not slightly longer.
In fact, August, Neeraj, was when it made those levels of 1,095. Sub 1,100 for Reliance at that time. And then from there, it started its ride up, and then there's no stopping it from those levels. Aside from that, also, I guess, announcements for things like becoming a debt-free company by FY20 and FY21, stake sale to Aramco. These are all the additional triggers that have helped Reliance, scale this additional distance of 1 lakh from 9 lakh to about 10 lakh odd crores that it has managed to pull off. But and aggressive target prices from brokerages as well. I think some have scaled 1,700 also.
And you've got to think of what would have happened to the index this year if Reliance would not have participated the way it has, where we talk about a lot of other things, but Reliance not participating would have had that problem. The other bit is Z Entertainment. And I don't know, this morning we were all talking about this, right? That how would the street view it? Is it an undervalued stock because it's a successfully running media house which is available at a very starkly lower valuation, or will the street believe that maybe there are more skeletons that could come out of the cupboard, and therefore let's not go out and try and buy what is arguably a falling knife, because these things might keep the stock price under a bit capped. And for now, it seems like that's playing out.
Especially when it's become a company which is largely held by institutions. A lot of reports also indicating such a scenario also indicates that it could become susceptible to any sort of takeover, hostile takeover target in the near future. But as you rightly mentioned, with promoter holding coming down to 5%, there could be more issues which could come out. And reconstitution of board was something I think which the street had expected after the promoter holding had to fall to levels that it has fallen to now.
It'll be really interesting to see what else comes out of the Z closet and whether there are other questions that are being raised, not because of any other reason, but just because the corporate governance standards of people might be different.
And
not legally wrong, but otherwise.
Partnership? Where's the strategy going forward?
Yeah,
I think that's out of the window now. They don't have.
They have only financial partners.
Yeah, these are all financial partners.
So maybe that could be in likes of what happens to a lot of other maybe financial. You have a very valid point, but maybe they will put in something in place at some point of time to figure out what the next course of action would be. with regards to Zee
In fact, the
Entertainment.
first disappointment came in when they initially sold stake to Oppenheimer, when the street was expecting a strategic investor to come on board, which did not happen. They brought in another financial investor who already had stake in the company. And in the recent stake sale also, they were all institutions coming on board. So now when you got so many institutions on board, who takes lead, I think is a bigger question to be answered. And let's see if there is any sort of takeover target which can emerge in the near future, because you don't practically have a promoter now on board.
Yeah, you don't. But, well, as we said, the two stocks that we should focus on, one of them is Zee, the other one is Reliance Industries. Let's get in Probal Sen. He should be joining us in a moment from now. I think the big question for Probal as well would be that, you know, does a guy who looks at Reliance all through remain an all, I mean, is it the oil and gas coverage that is happening there, or is it now going to be largely a telco coverage, because the new triggers for Reliance, both for the upside and the downside, seem to be coming in from the telco business. So you should be joining us any moment to talk about what next for Reliance after this massive move that we've seen in the stock since August, wherein it was sub 1100 and now knocking on the doors of 1600 and eclipsing the 10 lakh crore market cap.
The other thing also, while we're talking about telecom, is to, you know, the other third stock is Bharti Infratel that we're looking at.
Which is up 10% too.
And the kind of move that stock has seen. It's been a very underplayed stock up until now. You've seen the kind of, you know, crashes that the stock has seen. And with this tariff hike, with the turnaround for the telecom space, this is definitely a key beneficiary because of the fact it's already been so undervalued. So much more interest will start to come into this counter as well.
Yeah, by the way, from about 190, 180 odd to 248, that's been a serious move too. But Reliance Industries is what we're talking about, and Probal St. Johnson right now to talk about what next after this big move that's happened here. Probal, I wonder, do you get asked this question that are you an oil and gas expert or a telecom expert or a mixture of both? I mean, when it comes to Reliance Industries, I think
I don't think anybody makes the mistake of no, I think it's a real challenge today, to be very honest with you, for people like us who have, you know, not only because the sectors are different, but also because the valuation and the way that people look at new age consumer businesses, including telecom, is drastically different from how one, you know, looks at. Hello, am I audible?
Completely audible, Probal. And so, in fact, that was going to be my question, Probal. If you can hear me.
Oh, sorry.
Because we can hear you loud and clear.
Yeah.
That was going to be my question. I mean, the simple start is, what's next for this juggernaut, which is a mixture of telecom and oil and gas? What next? How do you view at Reliance from here on?
I think if you look at it, the interesting thing about this latest rally, which is, you know, if you look at the last 1 lakh crore movement that's happened in a fairly short period of time, I think what is interesting is that, you know, it has been driven in a time where downstream margins actually have been at pretty much, you know, abysmal levels, whether you look at refining margins or you look at petrochemical margins. So to me, I think what is also interesting is that if you look at the next 12 to 15 months, in addition to obviously the kind of strength that we are seeing in both retail and telecom, if you see, you know, a similar kind of traction or some recovery happening in downstream margins, then I think there is a further trigger and a further re-rating that one can see in overall group earnings. So leaving aside the point about which sector will continue to drive, obviously, as you rightly mentioned, the valuation metrics for retail and telecom are very different. The multiples that these businesses get are obviously much higher than a traditional cyclical energy business. But from a business earnings perspective, I think a recovery in downstream margins is another additional fillip, you know, in addition to all that is going on. Obviously, the other big aspect is just how much of a tariff hike can one realistically build in to the telecom segment. I think, you know, consensus would probably look at maybe, and guidance, unofficial guidance rather, is in the range of maybe around another 10 to 15 rupees or so. But 10 to 15 rupees not only takes up EBITDA levels to by a disproportionate level, I think the target multiple you would give would also see a jump, maybe from levels of 7.5 to 8 times 1 year forward EBITDA that people are giving it today. With a higher tariff structure in place structurally, you can maybe go back to, you know, the peak multiples for telecom companies of maybe 9.5 times, which is a significant 200-250 rupee kind of a jump on a per share basis for the EV from this business alone for Reliance. So I think the journey from 10 to 11 lakh crore is probably a combination of continued strength in the telecom and retail business, but also complemented by even a small recovery in downstream margins. That's the way that we are looking at it.
Prabal, just, since we're talking about telecom, I'll keep it with that before we move on to the main oil and gas business. So now for Jio, which was the disruptor when it entered the market, it flattened out the rates. The ARPU started to drop, almost for everybody. Does it now become a shift of focus, because even a behemoth like Jio now wants to make money, wants to show that it is, making some income, not just getting subscriber base? So is that going to be the next driving force, where we start to see more of the focus shifting towards shoring up the ARPU?
I think Jio has always stated one thing, repeatedly, is that their intention is always to provide a value proposition which is slightly better than any of their rivals. So I think this tariff increase also has come about because one has seen that at the end of the day, for the entire industry to survive, there is some sort of rationalization that needed to happen as far as tariffs is concerned. That plus the fact that there is this thought process that IUC, which is those interconnectivity charges, are not really going to be made zero in the time frame that it was originally thought of. And news reports that we hear indicate that they can probably be deferred by at least another 2 years. So I think at some level, I think there is this, the thought process is that while Reliance is taking in, some sort of a tariff hike, it is more to sort of maintain the kind of parity that they've always had with their rivals, while still remaining the best value for money proposition as far as their network and as far as their offerings are concerned. So I don't quite see that Reliance will be looking to, disproportionately take a hike or, shift its focus on improving margins. The sense that we get is that their focus still remains on maintaining their lead as far as subscriber addition is concerned. But yes, a tariff increase of even a 10-15 rupees, as I said, has a huge impact as far as their EBITDA and their profitability is concerned, given how little margins exists today in terms of increase, and everybody has been building in that 125 to 130 as being the absolute peak ARPU that one can imagine. That number moves up by 10-15 rupees. It structurally changes the way you look at profitability in this business. So that's a huge move in that sense.
Okay. Now let's talk about the other side of the business and the Aramco stake sale and the comments of becoming a debt-free company in FY 2021. How does that play out in terms of what the market sees as an investment opportunity, even at levels of 1577?
I think, with Aramco, I think, comments that have been made by Aramco very clearly indicate, and I think that their first priority is probably completion and execution of their upcoming IPO. And to that extent, I think that, earlier guidance or earlier soft guidance that was there, that this deal would be closed by March 2020, may be a little bit optimistic. Our sense would be that it would be FY 21. That this deal would actually play out. But directionally speaking, I'm not too concerned whether the net debt actually goes to zero or stays at levels of maybe even 40,000-50,000 crore. I think the important thing is that from the level at which they have been over FY 18 and 19, there is a substantial reduction in debt levels to maybe less than, as I said, less than 40,000-50,000 crores by FY 21 end or by early FY 22. If that kind of deleveraging plays out with the operating earnings increase that we are anyways talking about, then obviously that's a very different structure of Reliance than what we have been used to. People who have been tracking it for 10-15 years. Leverage and capital allocation was always the priority for this business, for this company rather, and the shift to focus to have a much cleaner balance sheet and be extremely focused on monetization of whatever investments that they have done over the last 5 years. I think that's a very different direction strategically that the company is taking. So it would be interesting to really see how future capital allocation decisions are taken if the focus will continue to remain on having a much leaner balance sheet than they've been used to over the last 2 decades, really. So I think that is something that will probably drive the next round of re-rating as to how they navigate this new environment, and whether with a lighter balance sheet, profit growth and earnings growth can actually continue to increase over the next 5 to 7 years.
Deleveraging will be the next move for the company, and everything hinges on that Aramco deal, which they've stated. In case that happens, they will be net debt-free by FY21. But Prabal, they've already said that with regard to telecom business, capex has peaked out. Positive development in terms of tariff hike. Looking at first half numbers as well, 1/3 of the operating performance is coming from your consumer business, which is telecom and retail, and of course majority of your contribution is coming from telecom. So keeping all these factors in mind, do you think the proportion, the contribution of these businesses in the next 1 to 2 years from being 33% could also scale up to 50%?
I think our estimates anyways build in almost 43% of overall EBITDA, 43% of overall EBITDA actually coming from these two businesses combined by FY21 end. And as you rightly mentioned, I think the number getting up to 50% by FY22 is something that is very doable. More importantly, if you look at target EVs across the street today, you will find that one of the objectives of the chairman in terms of making these businesses as important as downstream is already reflecting in the target valuations people are giving to these businesses. Even in our target price today of around 1650 odd, almost half the value comes from just retail and telecom, despite it, as you know, it being probably about 40% of the overall EBITDA. So yes, very, very clearly, despite the fact that refining and petrochemical should actually do much better over FY21-22 than they will in FY20, given the margin environment. Despite that, retail telecom growth is enough to keep increasing their proportionate share in overall consolidated group earnings for Reliance.
Okay, Prabal, we leave it at that note. Appreciate you joining us today and taking us through your views and what the journey ahead can be for Reliance Industries. First Indian company to hit that market cap. It's taken only 25 sessions for that journey from 9 lakh to 10 lakh crore. Let's see the next 1 lakh crore comes in how many trading sessions. Remember, from 8 to 9 lakh crore, it took the company, or rather the stock price, to 84 sessions. All right, shifting focus back to markets. 12,123 is where Nifty is currently trading, and Bank Nifty has been trading above the mark of 32,000. Let's bring in a market voice then, Jitendra Gohil of Credit Suisse Wealth Management, who joins us on the show now. Hi, Jitendra. Good afternoon. Good to have you on our show. After the recent rally that we've seen, Jitendra, indices have been trading at their record high levels. I think you guys have changed your outlook on India to neutral from outperform, which was there earlier. What's the rationale? Is it the valuation, Nifty trading at 18 to 18.5 times 1 year forward, looking very expensive compared to other emerging markets?
Yeah, hi. So what we feel is that the market, the fair value for market was around 11,800. That's what we feel. When it corrected below 11,000, we thought the upside is decent enough. In September, we upgraded India's outlook to positive or outperform with context to the emerging markets. But since it has grown past around 12,000, we think now the upside is limited. In terms of valuation, yes, 18 times looks stretched, but given expansion in valuation for the global markets, we don't see it's overheated as of now, and hence a neutral outlook for India. We think that although the growth is slowing down, but in terms of valuation, we feel that it will remain well supported. Remember, globally, the yields are falling further, and we think that the bond market is overvalued, and hence more and more funds will flow from bond to equity, and hence our outlook for equity is very positive. But for India, I think the upside is pretty limited given deceleration in growth environment. So that's what we are neutral as of now.
Markets and macros, they've not been in sync. Of course, we'll be waiting for the GDP numbers for the September quarter. But do you think all the negatives with regard to macros have been priced in the current levels that we're seeing on the screen?
We think that the growth will definitely is going to decelerate. So from 5%, we might come to 4.5, 4.6. The numbers will be out tomorrow. And the December quarter numbers are also not that encouraging. So all the lead indicators showing that the economy is going to decelerate further. We recently revised our GDP growth outlook to 5.6% from 6%. I think that's also a little stretched, because if we have to reach 5.6 by March 2020, I think we have to see a significant jump in the March quarter, which looks as of now, it's pretty stretched. But in terms of pricing in, I think we should not look India from a, just like a isolation. We have to look what is happening globally. So Fed has already taken a U-turn. They have started cutting rates. ECB has announced 20 billion euro of QE. They have also cut rates. So the global flows to emerging market is going to remain very strong, and hence we think the Indian market will also going to benefit out of it. So in terms of growth, I think still market has not completely pricing in it. We think there will be more deceleration in consensus forecast for earnings, but in terms of valuation, it will remain well supported. So whether it has completely priced in, that depends on the several other factors. We think that in 2020, the global PMI numbers, the manufacturing PMI is going to revive, and that will have some positive impact on India as well. Although we are not very much export driven economy, but definitely if the global manufacturing outlook improves, that is also going to be positively impacting India in some manner. But net we think growth slowdown is really concerning. We think GDP numbers are going to decelerate further before improving. But we don't think it is going to be a kind of a structural slowdown. We think over the next 6 to 9 months we might see economy will stabilize, and from there we will see some pickup. And markets generally tend to bottom out much before the growth in economy bottoms out. So that's a kind of a lead indicator. So we think that market has nicely priced in some kind of recovery in the global sentiments.
Right.
Plus there are a lot of reforms that government is going to go ahead. So that still is going to lift the buying interest in India.
Right. So Jitendra, let me ask you this. What is your end of year earnings growth forecast? What have you penciled in?
See, the thing is, when we started the year, we said around high teens when the market was somewhere around 20 or 25% growth, but clearly we did not anticipated this kind of significant slowdown. Definitely the tax cut has helped the earnings growth to some extent. So we think around 12 to 13% kind of a number looks possible this year. Obviously it depends on the other factors, how the banking earnings, which is going to have a major delta in terms of earnings growth forecast. The provisions, they have done good provisioning already. The credit cost is going to remain stable, or probably we will see the banking earnings could bounce back very sharply in 2020. So 21. So we think next year probably higher than the nominal GDP growth, around 15% is a safe assumption to start with for the Nifty overall.
The earnings forecast is slightly more optimistic as we come to the turn of the year. Let's talk about where you're positive and where you're not. So in terms of positive spaces, I think you're liking chemicals, you like IT, and I really want to know why you like IT. Private banks, that's been a consensus trade, and NBFCs, the stronger names, that too has been a consensus trade. So let's talk about chemicals and IT and why you like these two.
Yeah, so when we look at earnings overall and the sectors that we like, we generally look at which sectors are growing higher than nominal GDP growth. There are very few sectors. First of all, why chemicals? We think it's a structural story. For the past 3 years, we have been positive on this sector, and we think US, China, trade concerns are going to benefit India. And there are certain companies who are doing extremely well. They are doing capex in this depressed environment. they are expanding their capacities, they are winning new orders, and I feel that that's the sector that to be in, and probably in the next 5 years, 10 years, we'll see this sector becoming really decent size. And we think some of the niche chemicals, fertilizer segments, which are into new molecules. I think these are the companies that we like the most. Coming to IT, I feel that that's the good, safe, and defensive bet. Consumption-oriented companies or IT, I would prefer IT over consumption as of now. That will give you some kind of stability in your portfolios. And remember, last quarter they have done good hiring. The deal win momentum is very strong. So I feel that in 20 next year, if you want to shelter from volatility, I think IT is the sector that looks really good to us. We also like private banks. We think most of these private banks which are having strong balance sheet, they are going to gain significant market share. I was assuming that when the PSU banks are struggling, NBFCs are struggling, these banks to grow their earnings or their loan growth more than 25-30%. But what these banks are doing is not growing very aggressively, but they are protecting their margins. I feel that once the credit growth picks up, these banks have good firepower to grow their earnings much faster. So I feel it's a very good structural story. And we also like some NBFCs which are linked to rural recovery. I feel that there's a significant distress currently in the rural areas, but that's priced in. Some of the NBFCs which are focused in rural areas, I feel that these are the NBFCs that one should look at, because the NBFCs which are struggling, they have vacated that space, and stronger NBFCs can actually gain the market share very quickly. So I feel these are the sectors that we should focus on.
Jitendra, one final question. People selectively are turning bullish on the PSU pack on the back of divestment. Are you guys at Credit Suisse Wealth doing that? Are you logging into the PSUs at all?
Hi Neeraj, yeah. So in terms of PSU, we are not very positive. Generally we prefer structural stories. If you ask me how many PSUs will survive in the next 10 years, it's very difficult to give you that number. So I am not very positive on PSU space. It could be a tactical play, but from a long-term structural play, we'll stick to very large PSU bank which is well capitalized. Otherwise, we feel that it's better to play corporate lenders in a private space. So I feel that we will not go for we should not look at from a structural perspective for the PSU banks, but will be rather focused more on the private financials. And just to add to it, we feel that in terms of financial sector, we also like microfinance. We also like insurance space. So there are enough structural stories available in the financial space to invest in from a structural perspective. So I feel we don't recommend to add more exposure to PSU banks which are beaten down.
Okay, so bet on structural plays, not necessarily on tactical ones. Jitendra, good having you today. I look forward to having you in the studios the next time. But thanks so much for speaking to us.
Thank you.
Well, that's the view from Credit Suisse. Last 1 hour of trade left. Let's begin the trading wheel. We are 0.5% up for the Bank Nifty. The Nifty and the Sensex barely holding out. I must say in the session today. Let's get in our technical experts on the show to first talk about trade and then get in the fundamental experts to talk about some of the key movers. Jayesh Bhanushali of IIFL Securities with us on the show, and Himanshu Gupta of Globe Capital also joining in. Gentlemen, good afternoon. Thanks for joining in. Jayesh, to you first. What's the index strategy for the day today? The Nifty Bank is the outperforming one.
Good afternoon. If you see today's trade, we have observed that today, since there is no the physical settlement has kicked in since this expiry, because of that reason we are witnessing that the expiry day trading is very subdued, because all the leveraged positions which were open, I think they got executed a couple of days back only. So because of that reason we are witnessing a subdued expiry. But if you see a longer term chart structure of Nifty, it is definitely in the favor of bulls. I think Nifty did give a cup and handle breakout when it breached the important resistance level of 11,700, 800 in the last series. So I think even in this series, we have witnessed continuous build-up of long positions. If you see Bank Nifty, the open interest at start of the current series was just 8 lakh contracts, and now it is almost doubled. As of now, it is 17 lakh contracts. So the rollovers are also in favor of bulls, and even we have seen that cost of carry has also gone up by 20 basis point in both Nifty and Bank Nifty. So I think clearly it is showing that December series could begin on the positive note, and we may see the markets trending higher in December. The immediate target for Nifty could be around 12,250, 12,300 levels for the first week of the December series.
Okay. Let's also bring in Himanshu Gupta of Globe Capital. He's joining us right now on the show. Himanshu, let's talk about the index levels. I know it's probably difficult to take a trade on the current month series because it's the expiry of that, but come December month, what would the call be in terms of taking a position?
Sure. Good afternoon to both of you. Well, my sense is yes, clearly we are heading for a stronger series in December, and the technical setup and the open interest options data is suggesting that we can head higher. Now, having said that, I would like to say one thing that one should be waiting for some declines, some dips towards 12,050, 12,000 zone to enter fresh long positions here. Maintain a stop loss below 11,950, and my sense is that in the coming week, the markets can head higher towards 12,300 odd levels. So that's the take on the index, and my sense is that the short-term trend still remains up. One should be looking for dips to buy and enter long positions into the index.
Okay. What about individual calls? Himanshu, let's start off with you. What stocks are you recommending this afternoon?
Well, the first one, I would like to go long on Coal India. After retracing, after correcting from some higher levels, the stock has formed some supportive, strong breakout pattern today. And my sense is that the stock is heading towards 210, 211 levels. So one can initiate long positions in Coal India at current price, keep a stop loss below 201, and expect targets of 210. The second buy call is on Divi's Lab. The counter has given a very strong breakout yesterday after a very long consolidation, and not only from a short-term or intraday trade, this is a recommendation from a positional point of view also. For today, one can go long around 1790 with a stop below 1770 for a target price of 1830. But from a positional point of view, I'm expecting the counter to rally towards 2000, 2100 in the coming weeks.
Okay. Jayesh, your stock ideas?
See, I have two longs. First one would be JSW Steel. I think the stock has given a double bottom breakout, and I think it is poised to trend higher up to the immediate resistance level of 275. So at current market price also traders can go long with a stop loss of 252, and target price would be 275. Second stock that I am bullish on is Lupin. If you see, the stock has given inverse head and shoulder breakout in the last week, and I think there is very high chance that we can see the stock rallying up to the levels of 835, 840 levels in the near future. So with a stop loss 780, you can trade with a positive bias in Lupin also.
Okay, so those are some individual stock bets coming from our technical experts. Let's also bring in our fundamental guest then. Dipin Mehta of Elixir Equities joins us on the show now. Hi Dipin, good afternoon. Steel stocks have been moving higher, Dipin, in the last few days, and of course this is one space which is underperformed because of the cycle globally turning. Do you think with the current spate of news that we are getting with regard to some optimism around the trade deal between US and China, and some data points also indicating that China's steel output declined for the first time in last 20 months in the month of October, could augur well now for the steel companies going ahead?
See, I think there's no denying the fact that valuation-wise they are at extremely attractive levels, and a good play for a contrarian investor. I think if you keep steel stocks with a 12 to 24 month type of an outlook, I'm sure you'll get market or slightly higher than market related returns. But it's a sector which is not for the faint-hearted, and a lot of variables and news flow tend to impact the sentiment in the stock. So you're going to have a lot of volatility as far as stock price and earnings are concerned. But by and large, I think steel companies have been doing a great act in terms of improving their balance sheet, whether it's even someone like JSPL, which had been struggling last 2-3 years. They have made great progress in terms of having their debt under manageable levels. And the likes of JSW and Tata Steel, I think they are focusing on gradually increasing the domestic capacity. So I think a lot of the right steps have been taken by the steel companies, because of which I think they are well poised to take care of any downturn which may take place in the steel industry. And to that extent, I think the downside is protected in the stock. And if and when steel prices do move up, you could see a nice rally in steel stocks. So definitely positive on steel companies. Wouldn't want to sell them off at these levels. And if you have a slightly longer term view, maybe you could buy at these or slightly lower levels.
Dipin, any thoughts on Z, what has transpired in last few days? First, we saw the stock moving higher after the promoters sold 16% stake in the market. Then Subhash Chandra stepping down, 3 more directors also stepping down, and the stock since then has been reacting negatively.
I think there are some question marks as far as corporate governance are concerned, and resignation of independent directors is certainly not something which will be taken positively. So there was always this lingering suspicion that because of the kind of debt problems the promoters have got, whether they had actually ring-fenced all the listed Z group companies, especially Z Entertainment. But I think some doubts are emerging over there, and these days the way corporate governance standards, any compromise over there is dealt with quite severely in our stock market. I think that's one aspect which investors do not want to compromise on or ignore. So I think unless there is complete clarity as far as what the inter-party related transactions, if at all there are, unless there is clarity over there, I think Z may remain under a cloud. But I think no denying the fact that it is available at attractive valuations, and if one takes a slightly longer term view, then post all these issues as far as corporate governance question marks are concerned, you could see the stock rally. But right now, I think from a long-term conservative investor, we were quite bullish earlier on, but now I think we're getting a bit cautious on the stock.
Okay. Dipin, the other piece is this expected hike in the telco rates. Now, 2-3 spaces that get impacted, and I was wondering, where do you find the biggest merit, with an assumption that the hike is anywhere between 15 to 30%, and we do not know if all the 3 players will do it or only the non-Reliance players will do it. But let's work with the 2 assumptions that the hike is between 15 and 30% and all the players do it. What happens to the 2 other telcos, which is Vodafone and Bharti? What happens to Reliance? And what happens to Bharti Infratel?
See, I think that has got discounted, and in fact you may see a mild correction once they actually go in for a price increase. I think that the entire rally which started in telecom stocks was based on consolidation, and then subsequently we are seeing the benefit of consolidation in terms of higher prices, and to an extent the government is also trying to guide the industry to get some pricing discipline, which is always very positive. So, but I think it's got discounted the way these stocks have rallied, and maybe you could look at buying Bharti Airtel at a correction. I'm not sure about Vodafone's prospects, because the debt is just too high, and the kind of liabilities which they have as compared to the assets, or what chances they have of liquidating some of the non-core assets are concerned. The gap is just too wide, whereas I think Bharti Airtel will be able to manage the AGR payout, and now we hear that there's going to be no relaxation over there at all. So from that point of view, I think we are positive on Bharti Airtel, but would like to buy it at a correction. Reliance, I think the digital business has done well, and that's reflected in the consolidated value of Reliance. But then it has got some of the traditional businesses where there are a lot of disruptions expected in the future. So we'd like to be a bit cautious over there. And also in Reliance, the other issue is, how are they going to unlock the value which they've created in the digital and the retail business? Whether it's going to be like an IPO where Reliance becomes a holding company, or whether they're going to split the company and give shares of digital and retail. That needs to be seen, because we are not great fans of holding companies, considering that listed businesses of holding companies do not get accurately reflected in the value of the holding company.
Okay. The other stocks that one needs to monitor, at least from today's trade standpoint, is Indiabulls Housing Finance. With the stock trading at its highest level that we've seen in some time now, what's causing this excitement around the stock? 13% today. The last few days it's come off from levels of 264, managed to push through levels of 310 today and then cooled off a bit, but still no taking away from the kind of interest that the stock has seen. What's helping the stock move up and see this surge? Shefali Malik is joining us right now to help us understand what are the factors at play out here, Shefali.
Well, it's mainly the hearing coming up tomorrow at Delhi High Court. Remember, it's the same PIL which was filed by Citizens Whistleblowers Forum alleging accounting irregularities and round tripping of funds. So that is being heard. That will be heard tomorrow. And the word on the street is, or rather, the rumors on the street are that the promoters and the Indiabulls group will be given a clean chit in that regard, and hence that is why there's so much of excitement around this stock. Also, the second part to this is a tweet coming in from Subramaniam Swamy. So I'll just read out that tweet. A part of that tweet, that he's surprised to receive from Indiabulls a transparent response, sending company documents with bank statements. I have asked my legal team to examine these documents. So this particular tweet is being read with positive undertones, and hence the kind of reaction that we are seeing today.
Right, Shefali, thanks very much for that. In fact, you had Mr. Gillot also, joining in and saying that he's going to participate in any way, shape and form to support the investigations of the probe that the MCA is conducting, and he said that to the secretary. And I believe probably some of these triggers, are working their way into
the indirect buyback too.
Yeah, into the stock price, which is now at about 304. Dipan, what's your sense out here? Obviously, there are, short-term news flow triggers which have, bumped up the stock to this extent. But, do you feel that housing finance companies as a whole is a space that you should be focused on right now?
No, I think within the NBFC space, we want to be in the microfinance companies, the gold loan companies, and the consumer companies in that order, and then the auto companies, and finally one would look at the housing finance companies, just purely on account of the competitive intensity and the kind of situation which is there in the real estate market. So I would like to be a bit cautious over there. I think we have a lot of choice as far as NBFCs are concerned. And some of the companies and sub-segments which I mentioned, I think they have better growth dynamics. But one needs to be a bit careful as far as the quality of companies are concerned, and would like to go for stronger NBFCs which have emerged more or less unscathed from the kind of crisis which the NBFC sector has faced. And just a comment on Indiabulls, I think if Indiabulls is able to manage and survive this particular crisis, I think it's great news for the entire banking sector, because it's a large borrower, and I think that there were a lot of fears as far as a lot of private sector banks which had exposure to Indiabulls as to whether Indiabulls would be able to fulfill its obligations. And the way the stock price is rallying, and hopefully we'll have a positive outcome in the court case for Indiabulls, that would bring back a lot of confidence in the company, and that would have a lot of positive effect on a lot of the lenders who have exposure to Indiabulls, and these exposures have not been provided for. So we don't want what the street was really fearing. I mean, it is certainly an event which can take place for something like a Deccan Diwan housing. There were a lot of rumors that Indiabulls would go that way, but I think the way things have turned out now, hopefully they'll be able to manage in terms of their liabilities and whatever they have to pay to the bank. So from that point of view, it's very positive for the banking sector.
Just a quick trading point, Himanshu, is this a crowded trade now? Indiabulls Housing Finance, the way it's run up, and LIC Housing Finance also is one stock which has been the epicenter of attention within the housing finance space. Today also is up about 5%.
Well, talking about the Indiabulls Housing Finance stock first, I think the stock has still got potentials. Today it has made a high of 314, 315, And in case it manages to break above that level, I think it has potential to move as high as 355, 360 odd levels. The only thing is that the risk reward is slightly difficult to assess after the strong 15-16% gains in today's session. So my recommendation or my advice would be to buy above 315, keep a stop below 300, and I think if some positive news is there, so in that case we can see prices heading towards 350, 360 odd levels. As far as LIC Housing Finance is concerned, I think yes, the stock has finally given a very strong breakout in today's session above the 200-day moving averages, which was placed around 455, 450 odd levels. So here also one can initiate long positions on some declines around 450, 452 odd levels. Keep a stop below 435, and I expect short-term targets of close to 485 and 500 odd levels.
Okay. Well, do watch out, but Indiabulls Housing Finance is now up 17% as we speak. Some of these stocks have some very strong gains, so good going for these names. Watch out for all the housing finance stocks, but Indiabulls Housing Finance in particular, up about whole 16%. It's just such a mammoth rally for Indiabulls Housing Finance from the levels of 230 odd or 240 odd. It's been unabated one-way move for this one. 1 month, 66%. The others too, Piramal Enterprises, for example, has gained. Some of the other beaten down names too have bounced back remarkably well. Okay, one final question, Dipan, and that's on, amongst the pharma names, the ones which are doing well. I think Lupin is finding some favor. There is some traction in Sun Pharma last week as well. Talk about some of the larger names. Do you like them fundamentally?
So I think we like the fundamentals of the industry, but we are perplexed with the kind of US FDA violations which are coming out. And I think no company has been spared over there, and it's like a dangling sword. And the real risk is you identify a stock and then you feel that its dynamics are good and it's able to generate good returns going forward, and suddenly you have US FDA action, then the stock gets knocked down by 15-20% or so, and then that goes into a complete loop as far as future prospects are concerned. So I think that while intuitively the industry looks to do well going forward, getting granular is extremely difficult, and it's a sector which is very difficult to understand. And at the same time, I think there are transparency issues also, because the managements are not clear as to whatever US FDA action is taken, what kind of steps they are taking, and when those issues will get resolved. Those are all quite uncertain issues. So I think from a retail investor perspective, you can still look at buying a pharma fund which will cover many pharma companies. But from an institutional point of view, or from a high net worth investor point of view, buying just 1 or 2 pharma companies is really wrought with risk, because if those companies get affected by US FDA action, then there is no way that they can come out of the crisis that they get plunged into.
Okay, Dipan, we'll leave it at that. Thanks much for taking the time out and being with us. Really appreciate your time. I do believe that the stock of the moment right now has to be Indiabulls. I know there is Bharti Infratel, there is Reliance hitting 1 lakh, and there's some steel names, but Indiabulls Housing Finance right up there. And I think Dipan's point is well taken. I know Prime Focus is also there, but I'm just saying Dipan's point is well taken. If indeed Indiabulls doesn't, the fear about a month and a half ago was that what if some of these large NBFCs have some issues which drag them lower and create issues, ripples for the industry. I think those fears might be receding, and therefore as important as it for Indiabulls stock, it's great for some of the other NBFCs in the system at large.
The Yes Bank also should actually look at how that one's been doing, because there's been on and off these conversations. I think the Yes Bank stock also has seen that little bit of a bump up right now, just a few moments ago.
All right, we will continue tracking all these companies. Time for a corporate to come on board, and that's Prime Focus, a stock which has been in focus of late. Actually, in the month of November, you've seen the stock declining nearly 30%, and the reason can be attributed to its UK subsidiary, that's DNEG, deciding to postpone its IPO due to market uncertainty. Let's discuss this with Nishant Fadia of Prime Focus, who joins us on the phone line. Hi Nishant, good afternoon, and thanks a lot for joining us on BloombergQuint. What was the main reason? I know you guys have highlighted in the press release that due to market uncertainty, the IPO has been delayed, but any timelines when the street can see recommencing of this IPO? What sort of money was the subsidiary looking to raise here?
Hi. Thanks for having me. So, we were out to raise about $250 million. But unfortunately, like you mentioned, we couldn't get past sort of finish line, and we had to postpone the IPO. I think it was largely due to the fact that, the market was generally soft at that time. Saudi Aramco was also just happening, and I think generally just people were a little spooked, so we just decided to push that ahead.
Timeline when we can see the recommencement of the IPO process?
So, so far it's only been a week or 10 days since this has happened. So we'll probably take a call on that early next year on when a good time is, obviously in consultation with all the relevant, with the banks and our stakeholders, etc.
Nishant, the other overhang, I guess, which has been there on the stock is the debt which is sitting on the books. If you could just highlight what's the debt now that the company has, what is the debt reduction plan, and what sort of cost of borrowing which is there? Has it gone down with the interest rates falling?
Yeah, so we have about 2,600 crores of debt on a group basis. Our average cost of borrowing is about 8 to 9%. And a large part of this is obviously in the DNEG subsidiary, so it's dollar denominated, so it's at a fairly lower cost, but the blended cost is about between 8 and 9%.
Which DNEG was supposed to raise was going towards reduction of debt, is it?
Yes, that was the primary agenda to de-lever the group, and that continues to be the focus going ahead as well.
Also means that debt reduction plans have been kept on hold with the IPO being postponed.
Yeah, so we are still, obviously discussing other ways and means, and we've always said that, it is a priority to delever the group. An IPO was obviously one of the main sort of ways in which we thought we could do that. And although it's been postponed, we still look forward and, and work on other sort of opportunities where we can sort of reduce this debt, essentially via unlocking of value in our subsidiaries.
Okay. Nishant, I was just looking at the financials too. I think in FY18 and FY19, you guys have posted a loss. In first half of this financial year also, loss of almost 40 to 45 crore has been posted. When can we see the company turning profitable? Is it in the near future or will it take more time?
So I think, from an EBITDA perspective, which is the metric we use internally, things are quite good, in fact. We've in order book also is robust. We are working on the next Fast and Furious, that's Fast and Furious 9, the next James Bond, the next Wonder Woman. So from an order book and business perspective, we are good. Obviously, there's interest and depreciation, which at the bottom line level, which impacts the numbers, and a lot of other non-cash charges like ESOP, etc. So I think we track EBITDA closely, and we are quite confident of the way the business is moving and the order book is panning out.
So then tell us at EBITDA level, what sort of growth can one expect?
So we did, we'll see. We don't give a particular guidance, but we did about 550 crores of EBITDA last year, and we'll certainly grow from that this year.
Any ballpark figure, any growth number that you can share with us? Internal estimates?
Not really, but there'll certainly be growth.
Okay, fair enough. Wish you all the best, Nishant, and thanks a lot for joining us. That's the management of Prime Focus.
Thanks for having me.
Of late has been under pressure because their UK subsidiary, which has majority of its debt, they postponed their IPO process. They were looking to raise about $215 million, and as Nishant highlighted, the debt is almost 2,000 crore. At EBITDA level, they're doing good, but it's the bottom line. A lot of interest cost has been eating into that, and the stock too has been suffering because of higher debt, which is sitting on the books. The stock has been correcting, at least. I think even this calendar year, we've not seen any major growth coming by in terms of stock price.
By the way, Indiabulls Housing Finance, 19% higher now, and I think some of the others have also moved ahead with it. So JM Financial, for example, has had some gains, and some gains in the last half an hour, 45 minutes of trade, so about 6.5% up. Indiabulls Real Estate itself is locked on an upper circuit, so really good going for that stock too. I don't know about Indiabulls Ventures, and I'm guessing that too would be up in the session. Okay, it's been up for a better part of the trading day today, so no point, not change there. But 19% for Indiabulls Housing on a back of
this really actually
30-40% rally already.
The floodgates in terms of, this was, when it was a part of the index, nonetheless, it was a stock that people invested in. There were no concerns up until just a few months ago when this entire fiasco started opening up. And now once the clean sheet comes about, once they start, the normal churn of business starts, you can actually see from the lows that it had actually hit, there is that scope, that headroom left.
Well, difficult to say really, because the business isn't quite there. I mean, they have the cash, yes, but they're not doing any kind of disbursements. This is a bit of a move back from a rock bottom, but whether or not business comes back in the same fashion.
Obviously, in terms of, the management themselves had said with the kind of numbers that they posted in Q2 that they've taken a stance to make sure that they don't go out whole hog in terms of disbursements.
Yeah.
But in terms of defaults, in terms of buying back NCDs ahead of time, in terms of repayments, they've always been
right up there.
Right out there.
That's true. Well, that's why maybe people want to buy some of those beaten down pockets. Meet Voda was one such voice. He spoke to us earlier today from Max Life Insurance and believes that there's some cause for caution in the markets despite the recent rally. But he also said that the economic slowdown is only temporary and that there is enough liquidity in the system to cut up for the shortfall in economic growth.
I would still say there is a bit of caution. I don't think the breadth is as wide as one would see in a case of euphoria, So while everybody knows that there's a slowdown, the market seems to be going in the other direction. So people are still skeptical. So I think there might be some hope steam left in this rally.
So what are you working with? Are you working with this belief that usually, so many people that we spoke to said that the market typically knows more than what any of us know. If the market is trying to discount what will happen 6 months out at these levels, we might actually see or start seeing some recovery in the economic parameters as well. But earnings will definitely shore up. Is that what is the base case?
That is the hope, yes. We have this good situation in which while the domestic news is not that great, as far as the physical numbers, credit growth, all those are concerned, we know there's a slowdown. But that seems to be the situation even globally. And the stance of the global central bankers, the ECB, the Fed, even the Chinese central bank, is very, very easy. So you have this situation in which any bad news on the global front is being countered by federal bank, the central bank actions of huge amount of liquidity. It's kind of a put. We are back to the central bank put again. And good that this is happening in a situation where we are facing a slowdown, because then we have some hope and liquidity rally which will sustain the markets by the time the numbers start picking up.
Let me just, talk about the external factors also. US record high after record high, and we sort of following them in a way. But do you feel that this probably is overrun itself in a way, and the damage that happens from a setback from here could be that much more in nature and in impact?
It could be, especially in the large caps, given the way valuations are. But the thing is that we are not in normal times. Let's accept it. Traditionalists like us who look at valuations and earning growth have been proven wrong for almost 2 years now. And that's because of the fact that we have a situation in which I think $15 trillion worth of global central bank bonds or government bonds are trading at negative yields. So this is not a new normal. The traditional models are going out for a toss, and we are seeing that there is a bubble in various asset classes, but how to call the top is very difficult. In the meantime, we have a situation where physical assets are not doing that great in India. So the funds flow to mutual funds and insurance continues, and we have this rally. Look, India cannot stay at 4% or 4.5% GDP growth for too long. I think it's only a question of time, and as long as we have this liquidity to sustain us, by the time that we catch up, it should be fine.
And it's interesting because so far, even in terms of fund allocation, no one's really talking about sitting on cash a little bit. In case there is a correction, then you get that favorable entry point. Everyone is pretty much deployed to the hilt. So in light of that, do you feel it's more prudent to sit on a little bit of cash at these record highs?
Yes, but the thing is that there is still enough value out there in the non-top 100 names, or even non-top 50 names, I would say, because while the Nifty is at record highs, we still see the mid caps and small caps really trading at not so great valuations. They're still 20 to 30% down. A lot of them are even 40% down. So in case there is any sign of a pickup, there is good amount of value out there. So with a patient 2 to 3 year kind of view, there is work to be done. There are stocks to be picked out there.
All right, there is some movement which has come in the last 15 to 20 minutes, and on the upside, Nifty is now at day's high, and these are also your fresh highs for Nifty. Yesterday's high was somewhere about 12,138. Currently, we are at 12,144, and that's the case even for Bank Nifty, trading above the mark of 32,100. Well, on that note, let's find out which are the Fab 4 stocks that feature in Sharad Dubey's list. Let's go across to him. Hi, Sharad. Good afternoon.
Good afternoon, Navneet. The first stock is Balaji Amines. That space is already buzzing, and the stock is up almost more than 3%, and it has rallied 8% in the past 4 trading sessions. The company stated that it has set up an organic and specialty manufacturing capacity, which having a capacity of almost 874 tons per day. The project has also received an environmental clearance from the regulatory authorities. Up next is Shiva Cement, which is locked in upper circuit of 5% after it was declared the preferred bidder for coal mine in Odisha itself. The company also stated in its press release that it has planned to set up clinker and grinding units of 1 million ton per annum units, and also it will launch almost 3,000 tons per day of clinker plant itself. The next stock is LIC Housing Finance. In the housing finance space, it's almost 4.8% up, with fresh longs being seen as high as open interest of 50%, and the volumes trading at almost 2 times its 20-day average. And the last stock of the day is IIFL Securities, which is up almost 4.9% after it was reported in the bulk deals data itself. Abacus Group has acquired 2.7% stake, or roughly 89.12 lakh shares. So WF Asian Reconnaissance was the seller for this transaction. These were the 4 stocks buzzing in the space. Back to you.
Okay, Sharad, thanks a lot for bringing all those details. Sharad highlighted IIFL Wealth. You've also got IIFL Finance, by the way, that's been buzzing for the week. Today it's up 13%. We have seen strong gains coming in for this stock. And something like Balkrishna, I think this saw long positions in yesterday's trade. The stock was up 3%. Balkrishna is now almost at the high point of the day, up 5%. So telling you, even at these levels, there is some buying which is coming in for Balkrishna. And from the PSU banking lot, Union Bank is having a good day. That's up 10% as we speak. So the buying in the PSU banking lot continues. But moving on, let's bring in our next fundamental expert on board. We're joined by Mayuresh Joshi of William O'Neill India, who joins us. Hi Mayuresh, good afternoon. Good to have you once again on this show. And let me begin our conversation with India Bulls Housing, a stock which has been buzzing. Of course, reports indicating or rumors that the company could just win that case which was filed. The hearing is scheduled for tomorrow, and of course the case was revolving around misappropriation of funds. In case if they win, this was one overhang. The merger with LVB is of course out of the window now. Do you think if they win this case, the stock which is corrected so much, almost 60% this year, has more room for upside?
Afternoon, Navneet. I think there is a lot of news elements attached to the stock at this point of time. So largely, again, I think what comes out is a large unknown at this point of time. So you're largely playing out with probabilities on ifs and buts. So I think if it works in its favor, obviously, I think the beating that the stock has received, the rebound will be quite substantial. On the other hand, when you're probably looking at the fundamentals itself, I think the core fundamentals thereof are extremely patchy at this point of time. I think a lot of housing finance companies have been under a tremendous amount of stress. But what largely transpires is how are they able to repair their balance sheet? And again, I think all these issues going away. So I think there is a lot of news item attached with that. So I think I'll just wait and watch for a lot of these things to get cleared. On the other hand, as I've always maintained, I think LIC Housing, if somebody holds on, should continue holding on. And if Canfin Homes makes a good run, say it crosses that 410, 415 kind of a mark, I think most of the supply will be out of its way. I think the kind of fundamentals that I'm probably looking at in terms of NIMs expected to be between 3.1, 3.2, stable loan growth, disbursement growth expected, and the expectations of stable earnings actually coming through over the next few quarters. I think that should hold up in good stead. So again, I think a clear hold on LIC, and if Canfin probably crosses that 415 mark, I think it probably becomes a very good buy at that juncture.
Okay. I think another stock that's, I think, third or fourth straight day in a row now that we're seeing interest is Tilaknagar Industries. The stock's at about 19.5 odd rupees, another 12% higher in today's session. I think last 3 days put together, the stock should be up closer to 40-45%. Himanshu, do you track Tilak Nagar?
No, not really. You have to give me some time. I'll get back to you on this one.
Okay, Jayesh, what about you?
As of now, we have witnessed that Tilak Nagar has seen a rally of around 25-30%. I think we have a resistance around 23-24 odd rupees in the stock. So the current momentum could continue and we may see a rally up to 23-24 going forward. But it is a low liquid kind of stock, so I would not advise anybody to enter as of now. But anybody who is holding it can wait till the stock achieves the target of 23-24.
Okay. I think the Max Group stocks are also something that you should probably keep at the back of your mind. Because, on and off, you've seen all of these names buzzing about. Max Financial today, there was up about 12%. In the last 1 month, has been up about 23%. Max India has been up 12% in the last 1 month. And then you have Max Ventures, which in the last 7 days has moved up by about 10 odd percent. Himanshu, any of these names within the Max Group that you track?
Yeah, so Max Financial is one stock that's looking really nice on the charts. Although it has given a very strong up move after the breakout that has happened after 455, 460 odd levels, and the counter has rallied all the way towards 520. So my sense is that let it consolidate for a while around 490, 495 odd levels, and around those levels one can again enter long positions. My sense is that in the coming weeks it can again rally and resume towards the level of 540, 550. So it's a buy on decline, and it's looking still it can go higher from the current levels.
Okay. The other one is Bharti Infratel, which is just so active, and we've spoken about telecom quite a bit already. But Himanshu, come in on Bharti Infratel at 256, already closing in at the day's highs, expiry day. Would you initiate a fresh trade here?
So the stock is actually trading near its crucial resistance zone of 260, 265 odd levels. I would want it to clear above this level and close above this level in order to initiate fresh long positions. So at this point of time, it's an avoid. But having said that, for an aggressive trader who just wants to trade it on an intraday basis, one can still buy it around current levels, keep a stop below 248, 249, and 265 is the first target that I'll be looking for. Above 265, I think real momentum can be seen in the stock, wherein the counter can rally towards 270, 275 levels as well.
The Bank Nifty is inched up 0.8% now, 243. It's trading at the highest point of the day. Indiabulls Housing Finance is up 25%. Some of the PSU banks have materially contributed in the session today. A clutch of those smaller names are doing rather well for themselves. Corporation Bank is 10% higher. BOB, I think, is in the green. Plus, some of other names too have done well. Mayuresh, a non-SBI, BOB, PSU bank, do you have anything in your mind that somebody can fundamentally make an investment in? Not a large investment, a small investment.
So I think you still need to bide for your time when it probably comes to earnings, leaving aside State Bank at this point. But within the mid-tier names, what you've probably seen over the past 2 quarters is a gradual improvement or at least stable numbers reported on a quarter-on-quarter basis as far as the asset quality is concerned. Now you're obviously going to see and witness the kind of reversals that are going to come through in terms of the SR case, for example. So I think a lot of provisioning has actually been done on the NCLT 1 and NCLT 2 cases, and any resolutions thereof over the next few quarters positively work in favor of these banks itself. The second element obviously is how their capital adequacies are stacked, and Tier 1 ratios are absolutely poor for a lot of these banks at this point of time. So I think the infusion from the government side will come through. There is still every hope that I think they might just lose out in terms of the advances share to the private players, albeit also the situation where a lot of mergers are expected to take place, where historically we've probably witnessed slowdown actually taking place in terms of disbursements. So if you pick and choose probably something out of the pack that you probably mentioned, I think something like an Oriental Bank or something like an Indian bank at least looks stable on all these parameters.
In focus.
Okay, that's the PSU banking lot. Remember, the Nifty PSU banking index has gone up by almost 18% in the last 1 month. And of course, as Mayuresh was highlighting, the chances of recoveries are only inching higher after the SR Steel case. And remember, most of these PSUs have already made provisions towards those bad loans. All right, just 15 minutes to go for markets to shut shop. Let's take a look as to what the dealing rooms are recommending on this Thursday. We are joined by Yatin Mota and Darshan Mehta with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, Navneet, so the first stock that dealers are talking about is Bharti Infratel. It's rallied significantly in trade today. The market buzz is that there could be a potential Bharti Infratel, not Bharti Airtel. Bharti Infratel is up almost more than 10% in trade. Dealers indicate that there could be a potential, it's up 15%, potential tariff hike that could come in, and most of the companies like Bharti Airtel, Jio as well as Vodafone have indicated. A Morgan Stanley report indicates that the base case could be 20%, the bull case could be 30%. The buzz on the street is that a potential 30% price hike could come in. So irrespective of whoever takes the price hike, Bharti Infratel does definitely benefit because of the tower, and it's been a massive underperformer compared to the move that we've seen in Vodafone as well as the Bharti Airtel and Reliance. So there is accumulation that's happening on Bharti Infratel. The other one is Just Dial, which is up almost 1%, but dealers indicate that some of the FIIs have been actively accumulating the counter at lower levels, so that's something that's been spoken about. And Punjab National Bank is something that dealers spoke about. It's up 5% on very high volumes. Almost 42 million shares have already been traded. Dealers indicate that some of the HNIs are very, very active and accumulating the stock. But Yatin has a few more stocks.
Darshan, Yes Bank, that stock will always remain under focus given the fact that tomorrow the board meets for the fundraising plan. Dealers on the basis of the kind of news flows which are there in the marketplace, plus the technical trends, are recommending a buy today, sell tomorrow kind of a strategy. Remember, the futures are in the ban period, which means that cash is the only segment wherein you can buy shares of Yes Bank, since the buying futures would attract a penalty from the exchanges. So watch out for Yes Bank. That is one interesting stock. Indigo is the other one. Remember, the stock has corrected significantly, especially post the second quarter earnings. Dealers do indicate that at current levels, it seems to be attractive to a lot of these domestic funds which are buyers in trade today. And finally, Bandhan Bank. Remember, yesterday also we were discussing about this stock. Today is up 5%, and even at these levels, dealers do indicate that HNIs are buyers in trade today.
All right, Yatin, thanks very much for that. Mayuresh, just come in on some of these private banks, and not just focusing on ICICI Bank or an Axis Bank, but names like Bandhan Bank. Now with CSB, focus shifts to the southern-based private banks as well. So the likes of a Federal Bank, a City Union Bank, South Indian Bank. How does one play this space?
No, so I think if you probably leave aside, as you said, I think the top tier names, what probably happens within the second rung banks is clearly going to be how they perform on three key issues. One, I think how their advances and disbursements growth stack up in lieu of the changes that have happened. So I think the NIMs that are obviously going to get contracted with a lot of the changes with the regulator, savings rate probably getting linked to the repo, which means that the deposit rates come down. And in that context itself, whether they'll be able to grow their advances at a certain pace. Because a lot of these banks, have been lending to the MSME, SME sector. I think it's a high-yielding book, but it's also full of risks in terms of reported asset quality numbers. So that's point number one. Point number two, obviously, is going to be how asset quality issues are going to stack up. Take, for instance, I think Federal Bank, the SMA2 book is well below 2%. They probably need to recognize almost 460, 470 crores in terms of three asset stress groups, which will probably happen over the next couple of quarters, which basically means that the provisioning will move up. So I think in the context of loans stabilizing at 15% growth on an assumption over the next few quarters, with the assumptions of NIM stabilizing between 3.1 for Federal Bank, the expectations of higher provisioning basically drags down, I think, the post-provisioning profits. But largely, again, I think that also strengthens the bank's balance sheet to a great deal. When you talk about a bank like Bandhan Bank, for example, I think with Gru's inclusion, both in terms of AUM growth, AUM has actually touched close to 66,000 odd crores. But large element in terms of their advances and deposit growth still remaining about 30%. is something that one can hope for. What happens in terms of the reported numbers, I think if you probably take out the ILFS equation in terms of the reported numbers, I think the gross NPAs and the net NPAs look quite reasonable. Though you probably expect to see NIMs come down because of GRU's inclusion in terms of lower contribution to the overall spreads, I think the traction should very well continue. So yes, I think there is some hope and anticipation in a few of these second-run banks. So yeah, I think Federal Bank probably looks good. Anybody holding on should hold on. Bandhan Bank, as per our methodology, I think is suggesting that it should break out substantially if it crosses 640, 650. So I think there is still some distance to go from the current price. But anybody holding on can definitely hold on. But once it crosses 640, 650, our own sense is that it will probably break out all the technical barriers that it probably has and even can show higher levels over the next few months after that.
All right, I think India Bulls now is closer to 340 if I'm not mistaken. And it doesn't look like there are any breaks to this one, at least in today's session. So 27%, 161 million shares have been traded already, 341 as we speak. So no breaks to the move today. The other one is UPL. That's also not doing a whole lot badly today. It's up about 5%. It's somewhat been in a very quiet zone up until now. Today's session probably has been one of the bigger moves that we've seen in some time now. Himanshu, a call on UPL?
Well, we have seen some recovery from lower levels, but the setup is not very encouraging. And my sense is levels of 580 and 595. These are two areas of supply. Until we see a close above this level, I do not expect any big bang rally in the counter. So for now, the rally is done. And my sense is if you are already holding long, you should be booking profits here.
Let's get in some closing strategies as well. We're 10 minutes away from market closing. Himanshu, I'll stick to you. One top stock idea that you would like to put out in terms of a buy today, sell tomorrow idea.
So IndusInd Bank is one counter that has given a very strong breakout in today's session. It was facing a lot of supply pressure around that 1550, 1560 odd levels. And it has given a breakout above that level with strong volumes. So one can initiate longs here with a stop loss below 1530. For target spikes of 1590 and 1620 for carry BTST trade.
Okay. Jayesh, what about you?
I think in BTST you can do Biocon, which is trading at 284 odd levels. I think the stock has given a bullish inverse head and shoulder breakout above the 268, 270 mark. Currently it is trading 4-5% higher from that level. But I think the current stream of rally could continue up to the levels of 300 odd levels going forward. So with a stop of 268, traders can initiate a bullish trade on Biocon for a target of 300 rupees.
There's this, I think, brokerage upgrade as well that came in on Biocon early morning, and I think it is a part of the Bloomberg Edge today. We spoke about this in the morning on Bloomberg Edge at about 8:50, and the stock has done really well for itself. What is also doing well for itself is ICICI Bank. It's closing, it seemed like it's only 2%, but it's closing in with some gains, and now it's really putting on some distance between itself and Axis Bank. For the first time in 5 years, ICICI Bank's valuations eclipsed those of Axis, and now it's putting in some distance or the gap between the two of them. If you were to take a fresh trade, Himanshu, between the two, which one would you choose from these levels?
Well, I think I'll continue to stick with ICICI Bank. The chart pattern is suggesting that the counter can rally towards levels of 540, 545 in December month series. I'll be looking to enter fresh long positions on some corrections around 510, 512 odd levels. Will maintain a stop loss below 505 on a closing basis, and my sense is that the stock is still looking very strong for an up move towards 540, 545 odd levels.
Okay, that's ICICI Bank for you. And Hero MotoCorp is at day's low right now. The stock's corrected about 2%. And remember, even TVS Motors had been in focus. Yesterday also the stock went up. We saw gains of about 4 to 4.5%. And TVS continues to do well in today's trade. That's sitting with gains of about 3%. Mayuresh, before we thank you, within the auto pack, are there any favorites which are giving you valuation comfort after the underperformance we've seen from this space?
Well, Navneet, I think I'll still wait and watch because what largely has transpired and what I was going through in terms of data points, I think the MNCB players have got battered down very, very badly. I think the kind of discounting that we've probably seen and the kind of inventory built up. And though there is every hope that the BS6 buying will resume over the next few weeks, and there is some hope in terms of the scrappage policy getting announced, I think let those elements come through for the heavy commercial players. For the passenger vehicle players, as we were stacking up numbers over the last few days, I think a lot of these players have got beaten down. When you're probably talking about the entry-level cars, the entry-level hatchbacks, the medium-level hatchbacks, or even the SUVs. I think there is some respite in terms of the medium SUVs that you've probably seen, but large element of the entire universe still getting battered down. Though I think the waiting period and the number of inventory days has come down post the festive season. I think it's still a matter of time whether they'll be able to hold on in terms of better realizations going forward. Same for the two-wheeler players. I think the push through that one requires and the rural offtake, I think will largely depend on the Rabi season. And even the Rabi season is expected to be very, very well. I was hearing Colgate's management and they were very, very hopeful for the Rabi season in general. But I think the rural slowdown which has transpired over the past few months, I think even if there is a good Rabi season, I think it will just come back to normalcy over the next few quarters. So I'll still bide my time. I think auto ancillaries and specifically Minda Industries, there is something that can turn out to be a standout player. So I think I'm better watching out for the better rated auto ancillary players.
Okay, and you've mentioned that in the past. Minda is one of your favorites in the auto ang space. Mayuresh, we leave it on that note. Appreciate you joining us and taking us through your views on the markets. Very quickly, let's take a view on Cummins as well. That stock's corrected nearly 3% in trade. Jayesh, any call on the charts? Would you initiate a fresh shot at current levels?
Actually, if you see the data, the stock is currently trading in a lower top, lower bottom chart structure. And even in the last series also, we had seen that short rollover being formed. So even today, we are observing that the short positions are being carried over for the next series. And I think there is very high chance that we may see the stock reaching up to the levels of 520, 510 in the next series. So yes, anybody who wants to create short, they can create at the current market price with a stop of 565, 570 and eventual target would be 510.
Okay, let's start wrapping up the markets. Gentlemen, stay on, we'll take in closing thoughts from you. Well, it's another strong close for the Nifty Bank, another record highs for the markets, 12,154 on close. About 30.3% for the Sensex, about 120 odd points. But the bank's the real star, and frankly, it's all about ICICI Bank and then a few others chipping in. It's that big heavyweight which is putting on the gains and leading the bank side and therefore helping the markets as well. Should be amongst the top contributors. The mid cap and small cap indices will come up on your screen. And again, a good day of trades. The breadth was okay at the start. I think it would have stayed well or stayed true during the course of the day as well. Not a bad expiry, I must say. It was not too volatile. Let's talk about the gainers. Bharti Infra, 13% higher in trade. What a strong show by this one. UPL, JSW Steel, Yes Bank, ICICI Bank, the hero of the day to my mind. Then there is some gains in IndusInd Bank and Tata Steel too, and State Bank of India too, punching in some gains. What's not done well, Z, though I must say it's recovered a little bit from the lows of the day. Hero MotoCorp corrects a little bit. These two have been sulking now, as has been Bajaj Finance, to be honest. So the blue chips are taking a bit of a backseat the last few days and letting in the corporate facing banks go out and make some gains. That's really been the story in the last few days. Even Kotak Bank in the red. So, well, we were all wondering when would the rally for the top 20 stocks stop and the others start contributing. Maybe, just maybe, we'll start seeing that now. No need for a broader end of the spectrum.
Well, good going with the benchmarks moving high. You also had buying momentum being witnessed in the broader markets. And let me begin with Indiabulls Housing, which rallied nearly 24 to 25%. And goes without saying, the stock will be in focus tomorrow as well, as there are rumors that the hearing could go in favor of the company. And as you can see, the stock's also closing around the day's high mark. Remember, on year-to-date basis, this has been a laggard. So all these overhangs going out of the window, maybe this could just lead to further upside for Indiabulls Housing. L&T Finance Holdings was the other one. one, which rallied in today's session. So this one too saw some buying, and this too is closing around the day's high mark. The other one was Equitas, and this one has rallied nearly 12 to 13% so far this week. So it's turning out to be a great week. The stock also closing above the mark of 100. We were talking about how banking stocks were doing well. So Bandhan went up about 5%. There was some buying momentum which came in today's trade. Well, all the stocks are closing at day's high, which is technically viewed as a positive sign. PSU banks, Union Bank was up about 10%. You also had Punjab National Bank, which rallied today 10% higher for Union Bank, and PNB rallied about 5%. IIFL Finance, the stock has been buzzing in this week, and it's rallied about 17 to 18%. In today's session, particularly, the stock was up 10 to 11%. And Balkrishna Industries, which was witnessing long positions since yesterday, the stock was up 3%. Today also, this one too is closing at day's high with gains of 6%. On the losing side, I don't have many companies here, but Fluorochemical touched its 52-week low, so didn't have a great day. We just discussed Cummins with one of our technical experts. It was the top F&O loser as well. The stock was down 3%. ITD cementation was, I think, down right from the word go, so there was no recovery coming in here. And something like Future Consumer, I think they were one of the days when this one witnessed some buying, and today and yesterday was a day maybe for profit booking, and this is closing with cuts of about 5 to 5.5%. It has been a good series, Davina, third straight series where we are registering gains for both Nifty, Bank Nifty, while Bank Nifty definitely outperformed with 6.5 to 7% gains.
And this series also comes with a record for the index too. So obviously this probably, we've got in terms of what it's done from series to series, 2.33% on the index. But look at the kind of gains stocks have seen in individual stocks. Bharti Infratel has been the top gainer from last series on 35%, 36% higher. Z Enterprise, this could have been much more. Sans the last 2 days, where the stock actually saw a depletion in stock prices. IndusInd Bank, Bharti Airtel, JSW Steel, and ICICI Bank were about 12% that we've got. Amongst the losers, we have Titan. Titan is completely off the grid now. We've really not spoken about Titan a whole lot since its Q2 results, but that's down about 12% this series. Mahindra and Mahindra, Hero MotoCorp, so autos are some of the laggards there. And Larsen and Toubro there, quite an underperformer.
Yeah, while Nifty was up 2.3% this series, I think Bank Nifty is up 7%. So there was outperformance, more contribution coming in from the banking stocks. And as you can see, just two constituents are closing with in red, but the losses were just about subdued. RBL Bank rallied 23%. This was a short covering bounce probably. IndusInd Bank also bounced back. And we've been talking how ICICI Bank, being a heavyweight, has been contributing to the gains even on Nifty. So this is at record high levels, closing the November series with gains of 12%. The other heavyweight, of course, State Bank of India too has been contributing. And the other ones which so far were giving you better returns, HDFC Bank, Kotak Mahindra Bank, with just about 2.5 to 3% for this series.
All right, RBL, remember, ahead of that fundraising activity and the anticipation of that, I think made that big move that came about. Let's quickly just get in some closing comments as well from our technical experts. Coming to you, Jayesh, first off, while the series has been, closed out on a positive note, what should one look out for as we step into trade tomorrow?
See, if you see, I'll speak on the index. If you see the FIS long-short ratio, the ratio has turned positive. That is, it is quoting above 1.1x for the first time since July. It is clearly indicating that whatever the shorts they had, they are clearing it with a rapid pace, and this is indicating that the December series could begin on a positive note. And as I said at the beginning of the show, we have a positive view on the index, and for the December in the opening week itself, we believe that Nifty could test 12,300 odd levels, and going forward 12,500 could be the eventual target for the December series. So I would advise to create long positions in Nifty with a stop of 12,000, and the target price would be 12,300 and 12,500.
Okay. Himanshu, what about you?
Well, as far as the trade for very short term is concerned, I think 12,100 should be the stop loss for long positions. One should be looking to buy on some slight gap down or weakness in the markets, but maintain an intraday stop loss below 12,100. And my sense is that we can attempt to move above 12,200, 12,250 odd levels in tomorrow's session. So that's a call on the index. The closing has been strong, and my sense is that the participation has been fairly broad-based. We have seen participation coming in from the financials, from the banks. So all in all, it looks like a very strong closing, and one should be attempting to look to go long on any declines in the index.
All right, gentlemen, we'll leave it at that. Thank you so very much for joining us on quite an eventful afternoon. Appreciate you taking out the time. And on that note is also goodbye from Neeraj, Navneet, myself and the entire team that's put this show together. Thank you so much for watching.